Hey everyone, my name is Yaroslav, and in today's video we're gonna be talking about Oracle. And so far in 2025, the stock is already up around 25%. And if we take a closer look, most of the jump happened recently. Yeah, right after their latest earnings report, the stock shot up nearly 14%. Yeah, so what's driving this surge? In this video, we'll break down the fundamentals of the business, and then I'll wrap things up with a quick DCF valuation. And if you are not familiar with what Oracle actually does, no worries, I'll break it down really quickly. So Oracle gives businesses powerful tools to store, manage, and analyze huge amounts of data. Yeah, imagine this. A company has loads of info. Yeah, we are talking about customer details, sales numbers, inventory, finances, and all that. And actually, Oracle helps them keep that data safe, find what they need fast, and use it to make smarter decisions. Yeah, so let's say a big supermarket chain wants to figure out which products are selling the most, what needs restocking, or what buying habits their customers have. And that's exactly the kind of stuff Oracle's software can help with. All right, as always, let's kick things off by breaking down the revenue and take a look at this chart. Yeah, the total revenue is up 8% year over year, and the growth has been steady over time, yeah, as you can see here. But recently, it looks like the trend is picking up speed. But here's the thing, yeah, the main reason the stock has jumped so much isn't just the overall revenue. It's really about the cloud business and the outlook going forward. And honestly, it all comes down to expectations. So let's actually pull up the latest earnings report here and take a closer look. And by the way, they beat on EPS by 4.5%, and that's another factor behind the stock's strong post-earnings rally. And as you can see here, the big driver is the cloud revenue. It's up 27%. And even more impressive, the cloud infrastructure revenue jumped 52%, yeah, hitting a total of $3 billion. That's insane. This part of the business is growing super fast. And right now, it's still a small slice of the pie, at just about 19%, roughly, of total revenue. But they expect it to keep growing quickly and eventually become a much bigger part of the company. And if we scroll down a bit, you'll notice that management is really optimistic about what's ahead. Yeah, they're expecting total revenue growth to speed up to over 40%, as you can see here. And get this, yeah, they believe cloud infrastructure growth could hit over 70%, yeah, next year, which is just insane. All right, and here you can see that they are talking about multi-cloud. So what does that actually mean? Well, this is a key point because multi-cloud basically means that businesses can use Oracle Cloud alongside other major cloud platforms. So for example, let's say a company is already using Google Cloud to run their apps, store files, and analyze data, yeah? But maybe their most critical database runs on Oracle. So with Oracle's multi-cloud setup, they don't have to move everything over to Oracle Cloud. Yeah, instead, they can connect Google Cloud with Oracle Cloud. That's very important because everything works together seamlessly, and that saves a ton of time and avoids major disruptions. And because of this kind of flexibility, Oracle's cloud infrastructure business saw a massive 115% jump from Q3 to Q4 of fiscal year 2025. And that's a pretty strong sign that more and more businesses are choosing Oracle as a part of their multi-cloud strategy. Yeah? And this kind of functionality, well, it's actually one of Oracle's biggest competitive advantages. All right, so let's head back to StockUnlock.com to check out one of Oracle's most important key performance indicators, which is remaining performance obligations. Yeah, and so what does that actually mean? Basically, it's the total value of contracts Oracle has already signed but hasn't delivered on yet. And if you look here, there's been a 41% year-over-year increase, yeah, which is insane, I would say. And that means Oracle has a much bigger pipeline of future revenue already locked in. And that's a pretty big deal, yeah, because this kind of growth in remaining performance obligations gives investors a lot more confidence, including me. And yep, it's another reason why the stock has been climbing so much recently. So with all that in mind, it's clear Oracle is seeing huge demand. Yeah, there is no doubt about it. As we saw earlier, they're expecting some pretty crazy growth ahead. Now that brings us to this chart here actually, and you notice their free cash flow, the blue line here, has dropped quite a bit recently, and at the same time their capital expenditures, shown in green, have shot up. Yeah, so what's going on here? Basically, Oracle is investing heavily in building new data centers to handle all the demand, and that's what's been dragging down their free cash flow. But honestly, I would say this isn't a bad thing. Yeah, I'd actually say it's a positive sign. It shows they are gearing up for future growth, actually, and they're putting their money to work to meet their demand. So yeah, as we've discussed earlier, the demand has absolutely skyrocketed, but what's actually driving all that growth? Well, I wanted to understand what gives Oracle an edge over its competitors, and here's what I found. Oracle claims it stores a huge chunk of the world's most important business data, more than most of its rivals. And here's where it gets even more interesting. They are now able to connect the data to AI tools like large language models in a safe and secure way. Yeah, so companies can get the benefits of AI like faster insights and better automation without putting sensitive data at risk. And that mix of deep data and secure AI, that's a serious competitive advantage, I would say. But the revenue is really just part of the picture. To get a full sense of how well a business is doing, we also need to look at its fundamentals. So before we jump into the valuation, let's take a quick look at Oracle's fundamentals. I like using StockUnlock.com here. For this, they've got a super useful tool called the Insight Score. Basically, it rates companies from 1 to 5 in areas like profitability, growth, financial health, management, and so on. A score of 5 means the company is doing great, and a 1 means there are some red flags to watch out for. It's a really quick and easy way to get a snapshot of how the business is doing overall. So let's start with margins. Now these numbers on their own don't tell us much, I would say. I wanted to know if they're actually normal compared to Oracle's peers and also whether they've been stable over time. So on this slide, I pulled together what I think are Oracle's closest competitors. As you can see here, Oracle goes up against several big players across cloud infrastructure, databases, and enterprise software. Feel free to pause here if you want to take a closer look. And looking at the chart here, Oracle's gross margins are right around the middle. Yeah, as you can see here, sitting at around 70%. And if we go back a few years though, they used to be close to 80%. Yeah, so margins have definitely come down a bit, and that drop over time is something to keep an eye on. It's a bit concerning, I would say. Now, when it comes to operating margins, which factor in other costs like research and development, marketing, and so on, Oracle is actually near the higher end compared to its peers, and that's definitely a good sign. Yeah. But again, what gives me pause is the trend over the years. Yeah, just like with gross margins, we are seeing a bit of a slowdown, so the downward trend is something to watch. And finally, net margins, yeah, are sitting at around 22%, something like that, which is pretty average in comparison to its peers. So nothing too exciting, but also not bad. And now, since Oracle's been spending a lot on capital expenditures lately, we should expect actually margins to dip even further, yeah, in the short term. But if customer adoption keeps picking up, margins can bounce back in the long run, yeah, and that kind of pattern is pretty typical for cloud providers. And one thing here that does concern me a bit is their free cash flow margins. Yeah, it's currently negative, as you can see. But as we've already talked about, yeah, Oracle has been pouring a lot of money into capital expenditures, so that's really distorting the overall cash flow picture right now. And at the end of the day, it all comes down to whether these investments will pay off, yeah, and honestly, only time will tell. Now moving on to the management section, one thing I'm not a fan of is their stock-based compensation. As you can see here, it's reached about 8% of their total revenue, which is quite high, and the issue is they're not even buying back enough shares to offset it. If we scroll down a bit, as you can see here, the shares increased by roughly 1%. So what does it mean? It means that as shareholders, we're getting diluted, meaning we end up owning a smaller slice of the company. But hey, here's some good news. The spike was just in the most recent quarter. If you look at the bigger picture here, the total number of shares has actually been going down over the years, which is a positive trend. Okay, so what about their return on invested capital? Well, this tells you how much profit a company makes for every dollar it invests back into its business. And the most important thing here, I would say, is consistency. And as you can see from this chart, Oracle has been pretty stable in this area, over the years. But if we compare it to its peers here, it's kind of middle of the pack, solid, but nothing exceptional. All right, when it comes to growth, we've already touched on that. There's a huge focus on future expansion, especially in cloud and AI. Now let's shift over to financial health. As you can see, the current ratio is below 1, and that's a bit concerning, you know, which means Oracle doesn't have enough current assets to fully cover its short-term liabilities. I mean, the stuff due within the next year. But what's even more concerning is this. If you look actually at this chart, the company has way more debt than cash, and those two lines have been drifting further apart over time. That's definitely something to keep an eye on. So what's going on here? Well, Oracle is loading up on debt to fuel its aggressive push into cloud and AI infrastructure. Yeah, basically, it's a bold move, but one that comes with high risk if that growth doesn't materialize as expected. Alright, so that was a quick overview of Oracle's fundamentals. And now, before we jump into the valuation, there is something really exciting I want to mention. Have you ever heard of Project Stargate? It's a brand new joint venture between OpenAI, SoftBank, Oracle, and a chip company called MGX, and it's built to power the future of AI. So here's how it works. So OpenAI, the team behind ChatGPT, needs way more computing power to train smarter AI. SoftBank comes in with funding, Oracle provides the cloud infrastructure and builds the systems, and MGX brings the specialized AI chips, the brains behind it all, And together they're investing up to $500 billion into this project. And in the future, companies will run their AI models inside Stargate, fast, secure, and without depending on just one tech giant. And here's the best part for Oracle. They'll earn money every time someone uses it, because they are the ones running the cloud behind the scenes, Think of it like building a super fast highway for AI. Think of it like building a super fast highway for AI, and Oracle is one that keeping it running smoothly, If Project Stargate lives up to expectations, Oracle could be looking at multi-bagger returns, and maybe even a shot at joining the trillion-dollar market cap club. We'll see in the future. Alright, so now we've finally made it to the valuation part. So for a company like Oracle, I'm actually not going to use net income or free cash flow, and here is why. They've been investing heavily into capital expenditures lately, and as you can see here from this chart, that's really thrown off their free cash flow. They are building out a ton of infrastructure to support fast-growing parts of the business where there is clearly strong demand, just like we saw in their outlook. And on top of that, there's also, a lot of stock-based compensation, which can mess with the usual profit numbers. So instead, I'll be using something called operating cash flow, and that basically shows how much real cash the company generates from its day-to-day operations, without all the noise from big investments or accounting adjustments. And as you can see here, Oracle's operating cash flow has been pretty stable over the years, which makes it a much more reliable number to base our valuation on. So I'll be using operating cash flow for this analysis. Now, what I wanted to show you is the price to operating cash flow ratio. And as you can see here, Oracle is currently trading at around 28 times its operating cash flow, which is definitely on the higher end compared to its competitors. For some context, the 5-year average is closer to 20. Yeah, so based on this metric, the stock does look a bit overpriced right now. Yeah, but here's the thing. Yeah, no matter how high the multiple is, it all comes down to future growth. Yeah, so let's run a quick DCF valuation and see if today's price actually makes sense. Alright, so I run a simple DCF valuation using a 5-year projection of Oracle's operating cash flow. And by the way, if you've been enjoying all the charts and data I've shown in this video, Dale or from StockUnlock.com, I use it every time I analyze a stock, yeah? And honestly, it makes the whole research process way easier. If you want to give it a try, there is a 10% discount through the link in the description. Plus, they offer a 30-day money-back guarantee, so there is really no risk in trying it out. And it's a great way to support the channel and seriously upgrade your own research. And now back to the analysis. As I mentioned earlier, I'm using operating cash flow here for this valuation. And yeah, Stock Unlock lets you choose from a few different options. But for what we are doing here, this one made the most sense actually. So operating free cash flow. All right, so let's crunch some numbers. And over the next 5 years, revenue is expected to grow around 14% annually, mainly driven by strong demand for cloud and AI services. If Oracle can keep its operating cash flow margin in the 35 to 40% range, the operating cash flow could grow by roughly 10% per year. So I plugged in 10%. And if you check out the chart below, you'll see what I mean. Yeah, this kind of growth actually seems pretty realistic, and that's their projected operating cash flow. Okay, so as for diluted shares and dividend growth rate, I leave those unchanged. We'll just assume they stay around their 5-year averages. And when it comes to the price multiple, let's go with 28, which is where it's sitting right now. Yeah, let's assume investors stay bullish on Oracle. So with all that, we are looking at an estimated 12.5% annual return over the next 5 years. So what's my take on that? Well, here's the thing. A lot of the future potential is already priced into the stock right now. We are talking about growth expectations, the whole multi-cloud strategy, and of course the Stargate project we discussed earlier. And to be honest, I do think those assumptions are pretty realistic. I believe Oracle can hit those goals actually. But here's my personal view, a 12% return just isn't enough for me. My target is at least 15%, especially when investing in individual stocks. Yeah, because let's face it, if you are taking on more risk than something like the S&P 500, you should expect a higher return. Yeah. So for that reason, I'm not buying at today's price, but don't get me wrong, yeah, I really do think Oracle is a strong business with a solid edge over its competitors. Anyway, that's just my opinion. Always make sure to do your own research before making any investment decisions. And let me know in the comments what you think about Oracle stock. Alright, so that was my take on Oracle. If you found this video helpful, please make sure to hit the like button, subscribe, and as always, thanks so much for watching and I'll see you in the next one. Bye.